please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, for the market, check out the frontline indices first. So the Nifty is now sitting at that 11,745 odd mark, up about 50 odd points. I think it's pretty much getting close to the highs of the day. And look at the one big contributor actually, and that is Reliance. It's at the day's high. It's seen a very, very sharp move higher. And if you pull up the contribution that individual stocks are making to the Nifty, look at that. So 22 points are actually coming from Reliance alone. And then, of course, there are some of the other gainers of the day. And from the broader markets, so on an index level, it's appearing to be a little bit flat. But some of these infra names are actually picking up pace. So, something like a HCC or even a Rel Infra, they seem to be seeing some bit of an up move. Of course, that standard disclaimer comes in on Reliance. But let's get in Atul Suri of Marathon Trends, who we spoke with earlier this morning. He believes that this current bull market will carry on for another 2 to 3 years. So here's more on the sectors and stocks that he hopes will take the market higher.
Two things really matter. One is, am I allocated? Am I long equities? And the second thing is, am I in the right spaces? So when I meet clients, etc., I find that these are the two things that need to be addressed for me as an individual and for every market participant. So all these levels that we give, yes, I mean, they may or may not, you may get somewhere near, but the important thing is that you get a sense of size and magnitude and a sense of direction. So I really think that one must have a belief in the longer term trend that we are in this market. And one must not really wait for the perfect situation, perfect correction that at which stage I'll deploy. You must get into this market. Yes, it's run up a lot. Yes, it will correct. But the thing is that you have to look beyond these short-term cycles and ultimately be allocated to equities, because I still feel that we are part of a larger bull market, which I think will carry on for the next 2 to 3 years. I think that in a larger bull market, every correction will see a bit of churn, a little churn in the portfolio. That's par for the course. It is our job to identify what is the next set of leaders. And the next set of leaders, whether it is consumption, we've been talking on this for months, whether it is select pharma stocks, whether it is the private financials, it's there. It's there on the screen as of today. We can see it every day. But the pain is that who's going to bite the bullet? Who's going to exit out of losers? Who's going to get in when things have run up a wee bit? So I think that's the whole game. Targets are good. They give you a very good sense of direction.
Atul, the bank Nifty, of course, is made up of HDFC Bank and Kotak, which have 52% weight. You could add an IndusInd, and the rest, which have been the dogs for last many years, but have started to perform. But that's coming at the cost of the erstwhile leaders taking a bit of a backseat. Your thoughts on that?
So I think, Anuj, there are some stocks that are marquee names, and they represent a theme, almost a sector. Again, I'm like, for example, Reliance. I've been talking about it, that here is a stock which almost has a sectorial feel. And when Reliance comes out of a 7, 8 year, 9 year consolidation, do not expect it to be a small move. It can be a very, very tectonic shift, and the impact it has in the market. Please, I have a vested interest in this stock. I own this stock, so please do your own research. I run a PMS, so whatever I say, take it with a pinch of salt. The stocks that you mentioned, these are commercial, private lenders. Again, when these stocks, which have been through a multi-year bear market, actually 2, 3, 4 years, and when they are kind of breaking out and coming out, what you are seeing is new leadership emerge. This is to the earlier point that I said, that when markets go through corrections, a new set of leaders will emerge. And very often, some leaders in the previous move may actually rest or not do much. So it's going to be important. Even if you extend this argument further, you look at pharma, another sector which has been a 3-year kind of underperformer, and the kind of leadership that you're seeing in some of these pharma stocks is phenomenal. So I feel that in the last 2 or 3 months, you are seeing a churn, and it is important that you are able to press the trigger. So for my understanding, new sectors, new themes are emerging, and I think the crux is going to be able to move into this, because these trends, these stocks are not just a one-off small mid-cap stocks. They are marquee names, they are sectorial and theme representatives, and these I think can run for the next few years.
Atul, what about financials? Will you buy the HDFC and the relative underperformers, supposedly, HDFC banks and the Kotaks, or will you buy the ICICIs and the Axis, or will you buy both?
So if I look at the longer term theme, I think that the mega trend in our markets is private sector financials. And why I say this is that these stocks or these themes were doing very well before this correction that we saw in early 2018. Even during the correction, you found that these stocks didn't really correct much. In fact, they were continued to make lifetime highs. And when the markets again moved up, again they are making new highs. So this is, I think, a characteristic of a mega trend. And this is something you absolutely want to ride, because this is where you will find your multi-baggers. In this whole private sector financial plays, I feel that maybe there's a short-term correction. Maybe they are resting. They've run up very hard. But going ahead, I think that they can be much, much larger trends.
Okay, all right. Time to slip into a short break. You come back. We'll continue our focus on the markets and various stocks. Stay with us. Well, the Nifty is going from strength to strength. We're at the high point of the day, actually, as we speak. Reliance Industries, that's the stock which is moving with a lot of momentum, actually. You pull up the intraday chart, that stock is really taking off as we speak. And Tata Steel as well, if you compare it with the ferrous sector, well, it's seen a sharp correction, actually, from the top. But in the last few minutes, that stock is moving higher. The big question is, in terms of how aggressive is Tata Steel going to be with regard to Bhushan Power and Steel. Ritu has already told us that, yes, the bid is unlikely to have been revised too much. And that's why, in fact, if they don't get it, actually, it'll be a blessing in disguise for the shareholders. That stock is well moving higher. And just in the last few minutes, Hero MotoCorp as well was trading in the red. That's moved up marginally with a gain of around 0.5% odd just in the last few minutes, moving into the green as we speak. But Bharat Forge's Baba Kalyani believes that the Defence Ministry's order of around 150 artillery tar guns, that's positive for the company as well as the sector on the whole. He adds that the company maintains guidance of around 1,000 crores. That's from the defence sector in the next 3 years.
I think in 2.5 years, the order will get completed. And of course, you know, this is a fully indigenous equipment, completely right from steel to forgings to machining to everything else. So hopefully we will do well. I think I'd like to keep that guidance. We're doing quite well. This year we should see a start to our defense and aerospace business. I think we will see some reasonable amount of revenue coming in. And I think with the ATAGs happening and maybe other artillery platforms that will come in the next year or so, this should look pretty good. We are right now working on creating a capacity, hopefully by end of next year, to build 1 gun a day. So that's our capacity, and that will be perhaps the largest artillery capacity in the world once we get to that. And clearly, you know, exports is pretty much on the cards. In 2 years, we'll reach 1,000 crores, so that's pretty much where we are. I think if we are a little lucky with exports, we might do a little better.
All right, and also the Allahabad High Court has denied interim relief to power companies which had challenged the Reserve Bank of India's 12th February circular on bad loans. Earlier this morning, we also spoke with PV Ramesh, the CMD of REC, on their exposure to stressed power assets. Here, Mount.
I can only speak for REC, where we have a limited exposure to these stressed assets. About 15% is what we have lent to the private sector, of which 2% is in the transmission, 13% is generation, and that stretches across gas, coal and the hydro.
And some more market opinion. We caught up with an important FII voice, Joel Werner, CIO at Solitude Capital Management, and he says that there are opportunities in the Indian consumption space, adds that IT has seen a challenging phase in the recent past.
The weakness in the rupee has been a pain. It's been, I would say, a little frustrating. I think the discussion around two things driving that, I think, would be the rebound in oil and tariff war. Because we're looking for companies that are compounding at such high rates of return on their capital employed, weakness in currency, you know, again, we would expect somewhere between 4 to 5% depreciation in the rupee versus the dollar as we underwrite our investments. We had a large investment in IIFL. That did very well for us, especially the first half of 2016. We're still a large investor in that company for our fund. I think there's a great opportunity as that business separates into 3 separately listed operating companies. But our exposure to financials is really a byproduct of looking for asset management companies. So IFFL has one of the world's best asset management companies. You do look at a number of the consumer discretionary stocks. I can think a couple off the top of my head. I don't want to name them because to offend anyone, but they do trade at like 70 to 100 times earnings and will go up, and we don't own them, and that can be challenging from that perspective. So we do tend to be disciplined buyers. At most, we'll pay basically 1 times growth on profit after tax or on an EBIT basis on a multiple, and we're looking for that to basically go to 2 times growth. We tend to avoid investing in any commodity sector in general. That being said, you can't ignore it because it will drive the valuation of the currency, it will drive trade flows. We do not have any exposure to the Indian IT names. It's been a very challenged space for quite some time, and so we've been just kind of staying away from the fray. The IT sector is exciting, but most of that excitement, in my opinion, is in the private investing world, where we don't do any investing.
Okay, keep an eye out on the broader markets. Actually, a couple of stocks are moving lower. Apollo Tyres, that stock should come up for you. Suddenly, it's moved to the low point of the day. It's down 3.5%. Even Shriram Transport is seeing some selling pressure. So that one as well has moved low in the last few minutes. And Tata Global Beverages as well was holding in the green when we started off the show. Well, that stock has taken a cut of around 1.5%. We'll slip into a short break. We'll shift focus away from the equity markets. We'll focus on the...
Well, it's good going for the equity market, at least the large cap indices for sure. So let's take stock of what's happening in the commodity space. Manisha Gupta is here with a quick roundup. Manisha.
Thank you so much for that, Sumaira. Well, we have seen the steel prices finally come under some profit taking, and this is after the World Steel Association has come out with data telling you that the global steel production has gained by 5.8% to 155 million tons for the month of July on an year-on-year basis. In any case, the steel prices had been running up. We did see a 7-year highs in the Chinese market on sentiment that there could be some concern or a potential threat to output going forward in China. So that really seems to be taking a bit of a breather. We have seen profit taking come in. If you look at the prices, actually, we are 4% down from 7-year highs that we hit in the previous week for the rebar steel prices. So some profit taking finally coming in there. It is the Chinese output limitations, though, that still continue to support the prices. But the much needed profit taking clearly can be seen in case of steel prices there. Sumit Bagadia now joins us with his sense on that space. Sumit, hi. What are you looking at in case of steel prices, steel stocks? I mean, we have seen quite a bit of a run-up in both these categories, really.
Good afternoon, Manisha. Well, I think overall, if we see any dip, then that should be used as a buying opportunity, because overall, most of the stocks related to steel are looking good to me. And as far as the sector is concerned, we feel that in the next couple of months, we will see a good upside move in metals and steel. So I think overall, any dip in the prices from present level should be used as buying opportunity.
And would you say the same about the base metal prices? Because today has been a day when we have seen buying in nickel, zinc, aluminum, almost all of those metals. Do you finally see a specific direction buying coming in here?
Well, see, immediately there is a possibility that after a correction, this is a pullback move. If this pullback move is able to sustain, then we will see a good rally in next couple of months. As far as trading bet is concerned, I think one can initiate long positions in lead at the current market price, with a supposed to be placed at 145 levels on 143 levels on lower side, and on higher side one can expect targets of around 148 and 150. If the commodity is able to break 150 on closing basis, then we can see move till 160 or 165 levels in next couple of months. For a trading bet, one can initiate longs with a stop loss to be placed at 143 levels on lower side.
And that is a flash on your screens. PV Sindhu wins silver in women's
precious metals. Well, yeah, we would have liked gold, but nevertheless, silver is not too bad. But, you know, she did lose the first set and it was quite a severe loss, bounced back. But I guess it was just one of those days which wasn't meant to be, Manisha. But silver,
silver it is. And let's take a call on that at least. Sumit, what is your sense on silver? Is it getting higher from here?
See, gold and silver both have given a correction in past couple of weeks, and now from here on there is a possibility that we might see a upside move in gold and silver prices. You especially asked for the silver. Yes, silver is looking good to me. From here on, we can see move till 37,900 or 38,000 levels. So for a trading bet, one can initiate long positions in silver at the current market price, that is 37,300 levels. And from here on, we can see a move around 800 to 900 points. One can maintain stop loss of around 37,000 or 37,100 levels on lower side.
Okay, so for the time being, we'll go with silver. But one final call, and that really is an energy from you, Sumit. What is your sense? Because crude prices seem to be running up. Not the same case, though, for the natural gas prices.
See, crude is quoting at 68.70. That is NYMEX crude. I think on higher side, it will face resistance at around $70. So till that time, 70 is not taken away. We can see some profit booking in crude prices.
Okay.
And from here on, we can see move till 4,700 or 4,600 levels. At present, we have initiated a sell call in natural gas September contract. One can initiate sell, one can take sell positions at around 202 levels, with a stop loss to be placed at 205 on higher side for the downside target of 197 and 195 in next couple of days.
Okay, all right. Thanks so much for that, Manisha, as well as Sumit. Well, we'll wrap up on the show on that note. You stay with us. Business Lunch comes up next.